Hello and welcome to the trade setup. In this video we are looking at OKLO. It is time for another update, and in fact an update was requested, so I wanted to let you know that anyone can make these requests and I will most likely cover them, especially if there is an actionable trade setup to follow. And on this chart it seems that we have broken the designated critical area of support for that direct continuation to the upside, and this is likely indicating to us that we should be tracking a different interpretation. Yeah, this scenario is most likely invalidated in my opinion, and it will not be a focus for me anymore. We had here our perfect entry area. This is what we call the perfect entry, the 50% retracement, where we also had confluence with quite significant structural support. It didn't manage to work out, and that is fine. That is not why it was called the perfect entry, not because it was a guaranteed area where we should expect a reversal to a new 50 to the upside. It was called the perfect entry because it was at a level of quite high probabilities to create the reversal, and it was at the end of the area of support, meaning that if we get a sustained break below it, we should expect quite significant continuation to the downside eventually. We don't necessarily expect at this point, a continuation here in this white count to the upside in a follow-up wave 5, not after breaking the area of support at the $108.7. Now, with that said, we do need to remove at this point this interpretation and even the blue scenario fully, because this cannot really work out as an impulse to the upside anymore. But I do want to mention, from a large time frame perspective, we are still tracking a larger wave 3 to be forming, but now this would be part of a much larger leading diagonal to the upside. And within this pattern, we don't really have discount as an ABC apply anymore. We need to shift it slightly, where we are tracking here an ABC in a wave 1, ABC in a wave 2, and ABC in a wave A of a larger wave 3 to the upside. See, I don't believe that we have already reached the actual target for the wave 3. If we check that target, we have presented it previously, but if we look, I remember that the ideal target for such a wave 3 is at around the $490 level, the 138.2% extension. Now, I have not drawn that well enough. I didn't get the exact bottom here, but it is the 138.2% extension around the $490 level that we need to reach for the ideal target of this wave 3. Now, so far we have only gotten really to the 100% extension, which is a bit of a warning sign. I could consider this larger structure to be something like a WXY, in which case this would be a full pattern, it would be complete, and we should be prepared for much further extensions to the downside in terms of a more bearish interpretation of the chart. But I believe at this point we can still track with good likelihood continuation to the upside, but only within an ABC structure in this area, in which case we can, as I was mentioning, we can still look higher, but now we have a much deeper area of support for the correction here in the wave B instead of what we had in the wave 4, which was only to the $109 level. It was a quick early indication that this structure is likely not going to continue, and now we are able to have that information thanks to the Elliott wave theory. We do know that we shouldn't be prepared, we shouldn't necessarily expect continuation to the upside, and we should be prepared for an extension lower here in the correction that would really only start to get the support zone area benefits at the $78 level all the way down to the $29.7 level instead. So it was helpful in providing us quite an early indication that this structure that we were tracking in continuation to the upside has failed. Now, it could still manage to push higher, but it's not a likely interpretation. It's not likely, in my opinion, even if we get higher prices, if we push outside of this, something like a more direct movement in a wave B to the downside, I would expect it to be a correction. Now, we will be tracking some critical areas of resistance that need to be broken for this idea to be shifting, and there are other interpretations that could still allow continuation to the upside, even quite bullish ones, but not very likely in my opinion, not ones that actually provide us a reliable entry without a ton of risk. Because if we would be looking here, for example, at a 1-2-1-2 setup, yeah, sure, we would be within an area of support. We would even have some room within it. But honestly, that is quite unrealistic expectations those are quite unrealistic expectations in my opinion. And if we are looking here for a 1-2 setup, well, what do we do if the support zone breaks? It heads all the way down, and we aren't prepared for that, which is honestly, in my opinion, the more likely scenario anyway, that we push here even lower within a wave B. Now, in the shorter time frame, I am tracking this movement to the downside as an ABC structure that has formed. And within this wave C, I would expect to reach the 100% extension of the wave A. Well, not even expect, that would be the ideal target. But yeah, keep in mind, we don't need to get there and we don't need to stop there. But I would expect, yeah, this is what I would expect really, that in this wave C, we get a 5-wave structure to the downside. Now, I do have to say, it is possible that this structure does have a 5-wave pattern, complete, a 1, 2, 3, 4th, and a 5th. It could work out, but I would also prefer to be prepared for possible extensions lower, where I could actually argue that this is a 1, 2, or that the 1 even extends all the way down here. 1, 2, 3, 4th, and the 5th, where we could still get another low within this wave C, and yeah, even allowing us to reach the 100% extension around the $90 level. Now, if we really are to push lower, we will be tracking this in a separate scenario. We will be tracking this in, let's say, yeah, the orange scenario works, honestly. And within this area, or within this interpretation, I will be watching out for resistance here for a wave 4 at the levels between the $106.8 all the way up to the $124.6. And if we manage to break above the 61.8% retracement, well, I wouldn't necessarily turn to a bullish interpretation. I would really only consider that this is a larger ABC that has already formed a larger wave A, in which case we have here the ability to consider this something like an ABC pattern, where I'm still looking for an extension lower, and we will be tracking this interpretation within green. And in that case, I will be watching out for resistance here at the levels between the $126.5 all the way up to the $167 at the 78.6% retracement. Now, along this resistance area, we do also have some structural levels that will most likely prove to be more difficult to break, especially this line around the 61.8% retracement. And then we also have here the 78.6% retracement, which should also prove more difficult to break and provide a slowdown, at least, if not a full stop. Now, if we end up breaking above the 78.6% retracement, especially while we manage to form a 5-wave structure to the upside, the probabilities could still shift to a more bullish interpretation, a more bullish scenario. But for now, we are still deep within resistance. We haven't even gotten out of a possibility of an extension here in a wave C to the downside. And we are still looking at this point for lower prices. The pressure is still down. And for now, these are the levels. This is the trade setup. I hope you enjoyed the video. And if you did, don't forget to subscribe and let me know what else you want me to cover. And I'll do my best to do that in the days and weeks ahead. And until then, I hope you have a nice day and I hope to see you in the next video. Bye bye.